Hey guys, welcome back to the Game of Money. I'm Oren and I'm here with Nate Woodman. Nate is going to interject and then I will talk over him. And, basically...
Typical Thursday.
Typical Thursday. I know this stuff and I know what to do this. I'm here for you. What I want is all the people around me. Nate is there, but I want everybody else to come up and in sales and in marketing and in pitching, everybody believes that what they're trying to do is put makeup or lipstick or framing or positioning on the thing they have in order to make it look different and more attractive to people. That's not what it's about. That is not a successful track. That's what all the books want you to do, is how to explain it better, how to make it look more in context, how to frame it. What you really want to do is get to the truth as fast as possible, because reality is that which when you look away, it's still there. This is what we have. We have it and you don't. In order to get it, you have to give us money. That is the ultimate sales pitch that you want to use. You want to get as close to saying that as humanly possible. And so we're going to talk about the deep economy and what's down in the money system that you want to tap into, because at the deepest part of the money system, where the best trades are, the most liquidity, and your easiest chance of baking in wealth for you and your family, right? The pitch way down where Bitcoin lies, where money lies, where the Fed discount window lies, is we have it and you don't. If you want to have some of it, you have to give us money. What would you like to do? And way down there, that's almost a digital handshake, right? You're not even pitching it. That's the ultimate exchange. We have it, you don't, in order to give us money. Reality is that when you look away, it's still there. Nothing has changed. You know what it is. Supply and demand. You have demand. I have supply. What would you like to do? And that is the pitch for everything. But there's lots of reasons it doesn't work as you go higher out of the deep economy. So to Nate, while I prepare my next thought, to that you say what?
Yeah, something that just came to mind, speaking with a lot of our investors the past year, is they always think right away that they can frame themselves out of something. And so if they get their back behind against a wall, or they get stuck, or they're trying to talk to a new investor or customer or client, they always will come to us and basically ask for advice on how they can reframe or frame their way out of it. And you can't always do that. And so it makes me think of your lipstick comment of, it's not just about putting new colored lenses on, new different type of lipstick on it, not just trying to apply a new frame to it or new positioning. As you want to go deeper into the deep economy, it has to be more fungible and tangible.
Couple good examples that you can relate to. So when you come here and visit us, we run a motorsports museum and we have quite a motorsports collection. I don't want to get into all the supercars. At any one time, we might have 7 or 8 supercars here.
Yeah.
And what novices will always ask is, hey, do you race it or do you take it to the track? A modern supercar is built for the road. Let's say a car is $450,000. Okay. It ranges. You can have sort of M4 competition, Kith, Frozen Black. That's less. Anyway, I don't want to get in cars, but cars can range from $200,000 to $600,000.
Yeah, we'll be here all day if we get into cars.
Okay, yeah, we're not going to get into cars. But the reality is a car that goes on fast on the track can beat any car you buy from a showroom, a McLaren, a Lamborghini, a Ferrari, a Porsche, a Bugatti. Keep going. Pagani.
Sure. I always think of the
Audi,
Porsche back there too.
The Porsche back there, a BMW. There's a $80,000, $120,000 car called a Radical that will drive circles around any car you can buy because it's a track car. That's what it's made for, right? And so trying to take your method of selling, the way you market and your deal or your company, and use it in the deep economy is trying to, without correctly getting the financials set to go deep in the deep economy to extract money out of it. It's like you're taking a sports car to the racetrack. And a $30,000 car can drive circles around a $600,000 because it's made for the track.
Yeah.
And then
that kind of goes back to placing yourself in the right environments to make your car perform.
Yes.
Right?
So if you're going like to the SBA or you're out looking for money, you're talking to investors, the Small Business Administration, JP Morgan, business lending, they'll lend against whatever, if you make cookies, if you have cotton candy, you're a plumbing service company, you do engineering, you do welding, you do event services, you make dog food, you run a restaurant, you run 19 hotels. Like you could walk into the same office at the SBA for all of those things and 20 other things, right? What's the one problem with going to the SBA to extract capital from that source with that breadth of...
I mean, you're not framed properly. You're not set up, and they're going to chew you to pieces.
It's speed. So you go in there, and yes, you knock on the door, and you go, I got a pet food company. I make beef jerky. I do SaaS software. We do welding. We have 19 hotels. Great. Come on in. Let's start to take a look at it. That's a year-long process, right? Because they look at everything. It's going to be slow. They got to pull in the right people. Versus, let's just say you have a cookie dough company. The goal of that is to get it big enough so you can get it into a market, let's just say the public market, in which then you can turn the financials of that company into a tradable mechanism. So now people don't need to know what you do, how you do it, why you do it. And I'll land this plane. They can just look at the revenue growth, EBITDA, PE ratio, and they can trade your company without actually knowing much about what you do. And this is my big complaint or dilemma with stock pickers. You know, people who trade stock.
Big
so
time.
they don't know anything about underwriting a company. Right. So if you gave them $5 million, and so they trade $5 million by looking at charts and everything like that. But if you took them into the private market and go deploy this capital, they would lose it all in 10 seconds because they just trade data. They don't invest in companies. They're just watching the chart, looking for something that's going to break its 5-day trade.
Momentum trade. That doesn't happen in private equity as much.
The difference is you have to understand people, management, market, the technology, the competition, global macroeconomics, the GDP, understand the consumer sentiment, consumer behaviors, what's happening in the domestic political situation, what's happening at a local level where the commerce is, what taxation is doing, what the regulatory tailwinds, headwinds are, like all of that and more to deploy private capital in. But if you can take that deal now to get money from someone, if you can put it in a market where somebody looks at you just as numbers, then they can trade you. They can go in the morning, trade out in the afternoon, or trade out at the end of the week, and money can come in and you have liquidity.
Yeah, and then it's not about framing anymore. It's not about the new set of lenses. It's not about the new lipstick. It's about really what's the underlying cash flow asset that we can put a sticker on.
So that allows you to trade. Now you still want to build a great business and you say, hey, look, we have advanced technology. We have broad customer set. We have high gross margin. We have high net margin. We operate well. Our staff is well compensated. We have a good employment plan. Our audits are in shape. We paid our tax correctly. The government is not issuing regulations that are going to affect us. The tariffs aren't going to eat us alive. We don't have strong competition from Microsoft or Walmart or Amazon. We don't have customer concentration. So all those things give exposure and story to the stock, but somebody can look at it and buy it and sell it in a fraction of a second. And that is the dream of the deep economy, where you can take the thing you have that is unique, convert it into a number stream, and people in the deep end of the pool can buy and sell it with rapidly. And that's where you want to be. And the problem with most people is they're a special snowflake, but they have not converted their, as we talked last time, their deal into a trading card or a number stream. And so they can't go and access money and resources in a rapid trade. Does that make sense to you?
Absolutely. And big thing I think people should take a note of, would love for you to expand on, is there's a big difference between marketing and sales and capital raising.
Yes.
So a lot of times I think we see people confuse the branding of it with their magic pitch deck and how they go about pitching. Here's how we sell. Here's our brand. Here are our logos, ethos, logos, pathos. But it's a lot different than taking your deal out into the capital structure.
Number one thing that we see here is people who go out, raise money. A lot of times our entrepreneurs many times come from sale and marketing. And so they go, hey, I'm good at talking. I'm good at positioning. I can sell ice to Eskimos. But what they don't realize is whether they were selling software, they were selling paint, they were selling hotel rooms, they were selling electric vehicles, they were selling trucks, that it's a value proposition. The example I always use is, hey, you sell plumbing services, right? You go to your customer, they have leaky pipes. and they have to choose a plumber.
Yeah.
You're a copier salesperson, right? You're a truck salesman. Like businesses need to move stuff. They have to fill their so they have to pick someone. So you have a 1 in 3 chance. If you're in money, you can pitch 1,000 times and get 0 orders. In fact, that's not unlikely.
Yeah.
If you're a paper salesman, Michael Scott from The Office, you go pitch 10 times. Some people are just gonna be like, "Shit, man, we need it today."
Yeah, and it's all about your leads list. That's
your
what
leads.
you can take the best leads to a capital raise. If you don't have the pitch down and the financial markets down, you can go 0 for 1,000.
It's because the money does not need anything. What it's trying to do is understand how it will get a return. So somebody buying plumbing services is not looking for a return on investment. They're looking to plug the pipes.
Yeah,
Somebody
solve a
buying
problem.
dog food they have to buy some dog food. People have to buy some kitchen supplies. And then you get into MV Agusta motorcycles or I'm trying to think, Corvettes. Like I don't think anybody needs a Corvette. And then you're more into, you don't have as much of a value proposition, but you're selling lifestyle, right? You're selling status. So when you are raising money, you're not selling status. You can use status. You're not selling a value proposition. You can sell value. You're not selling utility. You can use utility. You're selling a downside protection, return on investment, and liquidity. And that's it. And everything else is supplemental to that. So the question you have to ask yourself, and I'm not going to be able to answer it today, is how do I take my special snowflake? I don't care if you're doing $1 billion or you're doing $1 million or $100,000. How do I take that and convert that into a financial playing card and take it out of the sheep economy, or as we've been talking, above the line, where you have retail money, slow, expensive, difficult to obtain, high search costs and very high costs, and get below the line into the deep economy and just go, this is the asset I have. Yes, it's a special snowflake, but here's the data on it, and put it into a market that trades that data. And if that sounds abstract, we talked about last time as a Michael Jordan rookie card. The Michael Jordan rookie card represents a whole ton of things. It represents Michael Jordan's career, Michael Jordan's work ethic, Michael Jordan's ethos, the Bulls. How many game?
Was it 72?
Repeat?
Oh, yeah. But
Yeah.
then they also had before Golden State took over, I think they won 72 games.
72 games? Yeah.
I think so.
The story of Michael Jordan playing the third period of the
flu game.
Finals with the flu
Yeah.
game. So the Michael Jordan rookie card captures all the special snowflake
Air Force
stuff,
Ones, all of it. Yeah.
everything, but as a number. What are the numbers? It's graded. It's number 30 of 100. It has a year of issue. It has a condition. So it has things in it that in a very set market where it has a set value and you can measure it by the numbers, and it has very high liquidity. So how do I turn my business into a financial playing card and then take it to the market that trades those cards? That's the question you're asking if you're playing the game of money. So we continue, as we get into this, to ask questions but not give the answer. I know that might be frustrating, but for most of you, we have to get you thinking about this topic. Yes, I'm in the sheep economy. If I needed money for my business, I would have to go to JP Morgan, SBA,
Credit union, small
credit
business,
cards,
all
small
this stuff.
business, Bank of America. And where could I go, which are time consuming, high search costs, and painful.
And it increases your burn rate.
Increases your
It
costs.
already sets a clock that you then have to answer to as well.
What does all this tie to? Easy living, being able to work a regular work day, being able to have time with your family, take care of yourself, and have some time to take care of things. If you're constantly needing money, is very hard to get. You're not sure how to access it, and you have to go to these retail places. It's stressful, time consuming, high cost. You're definitely not on easy street. So we want you to stop having to rely on those places and be able to go deeper into the deep economy. At the deepest levels of the deep economy, you just walk in with a commodity or a resource or a trade, you put it on offer, somebody else in a supply-demand market says, I'll buy it at that price, you meet that price, you transact, money comes in, and the whole thing took less than a day.
I got a question for you. So now that they're primed, what would you recommend be their first step to enter into the deep economy?
Easy now, because obviously the first step is just recruit Nate.
Hey, it's free to get in, $1 million to leave.
Yeah.
That's right here.
So first step to begin, we're trying to take the first step was awareness, right? If fish don't know they're wet. So now you're like, oh, you're wet. And you're like, oh my God, I'm
Yeah, there's a famous like philosopher quote, I think it was in The Power of Habit at the end, where the one fish goes up to the other fish and goes, how's the water? And the other fish goes,
what's water? So we don't want you saying, what's water, right? How's the sheep economy? Yeah, how's expensive, slow, suffering capital? So one is you don't have to say what's water and what's the sheep economy. Step two is I think you say who is a mile down the road from me in the same industry, in the same business that has easy access to capital. If they needed $10 million tomorrow, who could get it? And then start to look at the gap between you and them, and then we can start to fill in that gap. So I'll give you an example. You run 3 hotels, right? As a hotel group, your access to capital is you want to snap in another 2 hotels. Your access to capital is slow, weak, painful, and expensive. We talked about all the places you would have to go get it from. Then look at maybe a public REIT or a public hospitality group that has 100 hotels and they're public, and they could go announce, hey, we're going to make an acquisition and we're raising $50 million alongside $250 million of debt to go buy make 6 or 7 acquisitions. And they could signal that to the market, and then people would look at their financials and start to invest in that, either in that stock or directly into that deal. And so what's the gap other than the obvious where they have 100 and you have 3, right? But what are they doing? They're publishing they have audits, they're publishing their numbers, and they're in a market where they're trading.
And they've built an investor base.
They built an investor base.
Which is a big deal nowadays in terms of access to them, nurturing them, and keeping them becoming advocates of you in that long run so that they look at you as the expert. I think that's a key point is like those 100 hotels they have, those are made up of 100,000 investors that them give a big power when they walk into a room.
So this looking at someone looking downstream and looking at someone who looks like you, because this really affected our strategy over the last month. What I did is saying like, in the public markets, if you look at our stone company, our engineering company, in the public markets, how are these kinds of material science companies that we have doing 150 microcap, $200 million, how are they measured as a PE ratio, or what multiple on EBITDA or income are they traded at? And it was very hard for me to find someone in our industry that trades well.
I've tried really hard.
So then I started asking ChatGPT and some of the query engines, what is an engineering firm that in material sciences that has $150, $200 million in revenue? Give me some examples of them. And then I found a couple, and a few of them were trading at 35 on trailing EBITDA. So if our $20 million of EBITDA pro forma,
the trailing 12 months,
was traded at a 35, we would be $700 million company on $20 million of EBITDA. If there are a set of engineering firms that trade at a 35 multiple on trailing EBITDA, how could we look like them? And then I started seeing those firms. I'm like, wow, we don't look that different from them. And the name of our firm is OK Stone Engineering. This is not a solicitation to invest in the company or an offer. If you want to look at the pro forma of the company, you have to sign an NDA and be an accredited investor. And this is not a solicitation.
And we don't need money.
And we don't need money. Stone Engineering, our company, what I realized is if we mapped to a material science company, we could start to get measured or suggest to the investor base that we could be measured against that material science peer set, because there's a group of them. So what I'm looking to do now is drop the stone from our name and add material science so we can go deeper into the deep economy, join a market where there's trading stocks where people can recognize us. So the more we format our numbers and the type of deal we are to match a market that already exists and is trading, we get out of being a special snowflake where people have to think hard. So now we can just show up in the 150 to 500 million material science segment with some data on revenue, margin, net margin, customer concentration, the growth rate, management team, and EBITDA and get traded at 35. And that's exactly what I'm suggesting that other people do.
Easy to listen to.
Easy.
Probably harder to execute.
That's why I'm here. That's why we're here to help. And what do you do if you stumbled in this podcast and you're like, hey, man, I just want to sell more ice cream machines? No problem. What I think you have to do is listen to this in context of you want to sell more ice cream machines, and at some point, find some way to get enough scale or enough experience to attach to something that can be a company where you can own some of the company and benefit from the growth. But so if you're in sales, that's fine. Get good at sales and then take your sales ability and attach it to something where you can own a piece of it. So you're not just making income, but the benefit that the company gets from your revenue is your benefit as well. I'll give you a quick example. With my partner that I wrote about in Pitch Anything, when we started working together, I just found the money and I get paid a commission for finding the money. But eventually I became too good at finding the money and I wanted to be in the deals. My partner Jonathan said, sure, great, you can be in the deals. What I started noticing is he was putting me in the deals that were like the moonshots, the least attractive, hardest to do, Hell Island deals. And I was making those work. Then I went to him and I said, hey, Jonathan, you're cherry picking the good deals and I'm funding those. I'm getting no benefit. And I'm funding also the super hard deals where the benefit is much less. I want to be in the good deals too, because the money I raise and the sales I make are making those good deals. Look at the house you live in. Let me bring this home. Look at the car you drive. Cars are nothing. Forget that. Anybody can drive any car.
Hey,
look at the house you
Mazda
live
3.
in. Yeah. Look at the house you live in, right? Which is a $6 million house. And this was 20 years ago. So today that would be a $18 million house. And I live in a $1.5 million house. But we work on the same deals. So clearly there's something I'm missing here because I'm doing a ton of the work. Now look, I get it. The janitor at Microsoft who shovels the snow, like Bill Gates can't get in the front door unless a janitor shovels the snow. Janitor can't have half of Microsoft. Bill Gates can't run Microsoft unless he gets in the front door. Janitor shovels the snow so he can get in. But these are not equivalent skill sets.
This is your business partner.
Yeah, but he was my business partner. We're working on the same deals. He's originating. I was finding the money. We're closing it. Yeah. And he has a jet and an $18 million house. And I'm lowly driving around in an Aston Martin and having to live on the coast. Anyway, the metaphor is falling apart. We have reached the terminus of this conversation. Nate, next time, go deeper into the game of money.
No, finish your point about your business partner, where you were going back and forth with him on that. You were getting
so we're going back and forth, and I said, look, Jonathan, you can't cherry pick the deals and put me in the tough deals and take the easy deals for yourself and keep me as a partner. And he goes, I like cherry pick. I don't see a lot of deals. When the good ones come across, I like to keep them for myself and put my money in it, and then you finance them, but I keep them for myself because they're hard to get and they come out of my network. I go, that doesn't work for me. If you're looking for a partnership, that ain't it. So you got to decide right now, do you like to cherry pick deals or do you like access to me and the money that I raise? And he said, I just like to cherry pick deals. And I said, you're small time, right? It's small time and it's feral and you're boxing yourself in. But if that's where you want to be, I've made you, and the problem is I made him like whatever, 40, 50, 80 million bucks. He wasn't feeling a lot of financial pressure and scarcity, but I'm going to take my game and go run it by myself over here. And that's what I did. And I'll finish the story here. Today, I'm doing much bigger deals than he's doing. Hopefully he's listening. I'm doing better deals than he's doing. I've got more liquidity and maybe I have a higher net worth. But for sure, my life is a lot easier because I've figured the game out and he's playing the small ball. We can talk next time about believe harder or believe better. And I moved into believe better and he got stuck in believe harder.
Enough said.
Landed. All right. We'll see you next time on the Game of Money. Oren Claff and Nate Woodman here, delivering as much as we can in the limited time that we have to help you out. We don't need your help.
This is the late night FMD
This is it.
Sunday drive.
The Sunday drive. Yes. Next up, weather and sports at the top of the hour.